Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Monday, the 5th of April, 2021. Thanks for joining me today on episode number 1965. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me know if my mic's too hot. I don't believe it is. So, this morning, several things are in play here. Overall, the market is stronger. We are trading higher. We did push to 40.38 in the S&Ps on Friday, and that's the current high for the overnight session. So we have a double top. The volume is anemic this morning. Volume currently at 94,000 with the overnight inventory at 30%. Reason being that the European and Canadian markets are closed today. So Europe and Canada are closed today. This is the continuation of the Easter holiday in Europe. They take Friday and Monday off. So there's not much activity in the overnight session. So that's what we have. Overall, the market's allocating to risk still. We see the Russell's up 28 points from settlement from Friday's the last settlement. I'm not sure how they're treating Friday, how the exchange is treating Friday. If it's starting today's session with the Sunday Open, or if Friday's included in this, I'm not really sure. But the Russell's leading the pack up 28 points, 1.26%. Of course, the Euro stocks and the DAX are closed. The Nasdaq's up 108 and a quarter points, 0.81. The Dow 246 points. The S&P 2750. So versus related to Thursday's action, the last full RTH session, we are quite bullish today. So overnight posture, risk on. Crude is the laggard. Crude is again trading at $60, down $1.38 or 2.25%. Gold at $17.24, still chopping around between $16.60 and $17.40. It's been in this zone for quite a bit of time. The bonds are down 2 ticks. The 10-year note is unched on the day. Silver is unched on the day. So that's where we stand overall. I'm not having huge expectations today in terms of what the market's likely to accomplish. I don't believe that we're likely to go anywhere far today. The U.S. markets are open, so we're going to trade as we normally trade, but we'll see how things play out. We've run quite a bit since the FOMC, and we're above the 4,000. We pushed through that 4,000 like a hot knife through butter. Didn't really reject on a first test or anything like that. And I'll be surprised to see it move away without some sort of a response. Let's take a look at what was expected for Thursday. Thursday, the primary expectation is a small pullback into the 39.76 area. Was looking for a breakthrough and a push to 4,000 right up here. Was looking for a 4,000 breach, and as I said, I would have expected the market to pull back on a test of the 4,000 to finish around 39.90 or so. This is what we were looking for on Thursday. Here's what actually happened on Thursday. A very choppy open. We have an open. This is a classic open auction out of range. So we open in a gap, open auction out of range. So the market did push up a little bit. After the trader bite was done. We had an open auction out of range, a very clear opening swing, 39.89 and a quarter down to 985. We broke the opening swing and pushed up, pulled back. First opportunity right here, pulled back into the mid VWAP, and then continued to squeeze to 4,000. We got to 4,050. This is where I was expecting it to kind of fall back through and consolidate down here at the 90. And instead, it kind of chopped around and it just melted up into the close to push to 1475. So that's the RTH high for the week is 1475, leaving some singles behind at 4,004. That's the first test area from the top that I'm anticipating. Tough trade, I have to say. Completely sideways delta. This grind up was just awful. It's the typical low volatility, low VIX, low range trading that we see on these kind of buy and hold type of rallies. So not entirely my favorite. Here's the VIX. Here's the VIX. The VIX is falling underneath $20 or 20 for the first time in a while. This again portends further tightening and so on. So as we look at how the market has played this out, we are, let's go to the 5-year. You can see here we've spent a lot of time underneath the 20 in the past. And then, of course, in 2020, we shot way up and have been working with a higher VIX, higher risk premium on equities, on equity options. And now it's kind of fallen through the 20 and we're back into this grind down here. So things are calming down. It's in this environment, unless the market really continues to move and rotate well, I tend to look to thinner products for trading in this type of environment. So that's the VIX, and we're seeing the effects of a falling VIX. Is you get a lot of this stuff here, and a lot of this jarred kind of grindy, jagged movement and profile. So that's where we stand. Let me remove these stock zones. That's where we stand. We had a very strong finish on Friday. Very strong finish. This is a very bullish finish. And then what we did is we came in, not Friday, Thursday. We came in on Friday and we kind of continued to squeeze higher. Look at this profile, just very sharp down below. And then a odd looking, just massively odd looking profile there. 64,000 contracts traded, and most of that is driven by the non-farm payroll release. The non-farm payrolls triggered off at 40.23. I believe the SOC for the non-farm payroll is 40.23, so I'm monitoring that level there. I have a stock zone at 40.24, and we pushed to 38, and then we came back to finish in the 20s in the 40-20 handle. And then since then, we've just gone sideways, tested down through the SOC of the Friday non-farm payroll release and have climbed since then. And we put in a high of 38, which is the same as what we had on Friday. So we have a bit of a double top here. I'm expecting it to continue to extend higher. It's just, again, the melt up. The big drivers currently is, of course, the big stimulus package that's on its way. The infrastructure plan. Biden's administration has indicated that if they can't get enough Republicans on board on this $2 trillion plan, then they'll likely push it forward through the budget reconciliation method through Congress. Remember, Congress controls the money, and that's where the buck kind of has to push through. So that's where we stand. It is, traditionally the Monday after non-farm payroll is not such an active day anyway. Generally, the market tends to digest and gyrate and rotate. I'm expecting more of the same. We'll see. I don't have very high expectations for today, but we are in new all-time high territory. There's very little above here that we can reference, except for measured moves. So it's really, I have to sit here and favor. Generally, I have to favor structure trades on the long side and scalp trades on the short side, simply because we are at new all-time highs. So that's where we stand. Taking a look at the composite. Taking a look at the composite here, we've consolidated a fair amount down below. So if we squeeze this down and look at it this way, well, I don't want these. There you go. If we squeeze this down, this has been, pretty methodical. We sell off, we make new highs, we sell off, we make new highs, we pull back, we make new highs. Of course, all of that happening on this kind of a shaped delta, which I've been bringing up for some time. It's just the delta's been aggressive selling as we climb higher, and that could be, attributed to the fact that there are hedges going on in the futures while they're long stock, which long stock has paid off very handsomely for funds. But overall, we have a pretty decent base beneath us for this rally. We've got a fair amount of volume down here, and we've gone through these levels quite a bit. So we've gyrated through a lot of levels, the 3,900, the 3,900, and so on. And there's just I'm just not seeing a reason for this thing to stop going higher for now. So in general, we do expect it to come back and do some repair work, come back to the 4,004, come back to the gap zone, this tiny little gap it left behind below. But overall, I'm just not seeing a huge argument for getting short these prices. Hey, yeah, the 40-50 looks good. Let's get short there. Not likely to be a good plan. So that's where we stand. What are we looking for today in terms of trading a plan? Let me turn things on here. Okay, so for today, yeah, it's not, the heat map isn't providing much information either. For today, I'm looking for an open auction out of range. I'm looking for it to push to 40.38, potentially into 40.50 up here. 40.50 up till 40.50, but overall, I'm looking for a response down. Given the participation, I'm looking for a response down and a pullback towards this 24. This 24 is likely to become a key area. Looking for a response back to 24, and then just a consolidation. If we get that much range, not expecting that much range, I'd feel lucky if we had, 14, 15 points today, but we'll see. I have very low expectations. Secondary, a response immediately comes back to the base, comes back to base around 40.30, consolidates up here, and then starts grinding its way to that 40.50 from below. And then from there, who knows what will stop it. There's not much in terms of levels of resistance that I can identify. We have a measured move up at 40.57 up here. We have multiple confluences, but that's really it. So I'm not, as I said, it's really important to be patient and to kind of make sure you stick to executing just the planned trades that you have. I don't have very much in terms of planned trades. I'd love to see the market fall on itself. And the reason is because not because I'm bearish, but if the market rotates on itself and falls, it provides us with reference levels that we can trade off of, right? It provides us with previously traded areas and things like that that we can play off of versus just kind of feeling in the dark as we would be climbing higher and higher. Who knows when a seller might step in or buyers get exhausted. So if it rotates down, it gives us good reference points. Again, 4023, 4019, 20, 4014, last week's high, 4004, the singles, 4000, the millennial figure, 3990 comes next. Those kinds of areas become easier to trade because we have something to reference versus climbing higher. Okay, it is what it is. This is how the market is. Every type of participant gets their turn, gets their day, and the market regime right now is bullish. And so you just need to kind of be patient and buy pullbacks and so on and so forth. Good luck today, and I'll catch you tomorrow morning. Take care.